In this video, I'll be going over how to select stocks. In the last video, I went over how to find stocks. So this would be the next step, right? You find the stocks and then you choose which ones to select out of the stocks you find. So today I'll be going over technicals and fundamentals. For technicals, I'm going to go over moving averages, price action and general patterns, and volume. And then for fundamentals, I'll be going over which fundamentals matter the most, annual fundamentals, industry group, and IPOs. So it won't be too, it'll be pretty quick. I won't go too in depth into either of these concepts. It's just a brief overview of what to look for while scanning for stocks. So to start off, I have STX on my chart. I'm going to go over the technical factors and the fundamental factors for STX. But first, I'll go over the technical factors that led me into a trade on this stock, and it netted me a very, very strong gain. I had entered right around here and caught this huge move upwards. So let's get into it. So step one for technicals is the moving averages. This is the foundation. If the moving averages are bad, you don't even look at the stock for a second longer, because it tells you that the stock is in a bad spot in the long term, mid-term, and short term. And if a stock is in a bad spot over all time periods, I don't know why you would ever consider buying it. So that's step one. To expand further, the moving averages are these lines you can see on my screen. This red line is the 50-day moving average. So there's a few different ways they calculate these averages. There's exponential, simple, relative, etc., etc. I generally just use simple to keep it simple. But what's important is it's the average price over the previous 50 days, and it's a rolling average, and then it puts the line onto your chart so you see the average. So, 50 day, I'd call that like midterm average. This yellow line is the 20 day, which I'd say like is pretty short term. That's the shortest term I'll personally go for my moving averages. The purple line is the 150 day, and the blue line is the 200 day. Those are my two long-term moving averages. And anytime a stock is near or below its 200-day MA, instant no. You can just tell that the stock, over 200 days, it's barely gone up. Or if it's under it, over the 200 days on average, it's gone down. That's no good. So what you want to see is the moving averages stacked just like we have here, where the 20-day is above the 50-day and the 150-day is above the 200. So, from all time frames, you have the short term, it's moving up, it's close to price, it's strong. On the 50-day time frame or time range, it's moving up, it's moving strong on the 150-day. So the scene is set that on average across every single time range, 20, 50, 150, 200, that the stock is going up. So if you're hopping on a train and the train has been going that way for 2 months, the odds are when you get on that train, it's going to go that way. So that's kind of step one for technicals. And here I'll go and I'll expand on this. If a stock is trending down and you get on that train, you can expect where that train is going to end up. It's going to end up further down, right? So this is step one of stacking things in your favor, right? So you want on average stock to be going up. Number two is going to be price action and the general pattern. Because, you know, you could buy at any point in the uptrend, but you could the stock could go down a fair bit and then come back up and, you know, keep trending up. So you need to have some method to time your entry and you know, understand, well, at least understand the scenario that creates the opportunity for timing. So what I have highlighted here with this box is a consolidation zone. You can see the stock had made this huge move all up here from 90 to 150. And then the stock started consolidating. It kind of went sideways. It couldn't quite make a real move from the high. You can think of this as like a sprinter that's taking a breath, you know? He's panting, he has his hands on his hips, he's taking a second. Sometimes they take a second and they collapse, you know? But what you want to see is a stock that doesn't collapse. So what happens here, and I'm talking in reference to, in terms of collapsing, I'm saying how much it pulls back. So here, you know, the stock only pulled back 12% after making a huge move. That's indicative of resilience. It's got a lot more in the tank. This sprinter isn't done. He can keep running, right? But if it did this move up, and then it came down minus 50%, that freaking sprinter is done. He's out of gas. He's collapsed. So you want to look. So the main thing is you want a consolidation that's longer than 5 weeks with a low depth. So I'd say between 10 to 30%. And then as the consolidation develops, you want to see price. So like, to put simply, these are the highs, right? We have these highs. Price approaches the highs over here. And as it's approaching it, what price action does is it gets tighter and tighter. So here we have an 11% depth, right? Here we have an 8%. Here we have a 4%. So as it's going through these waves, through the consolidation, going up and down, it's squeezing the volume of the stock, and the volatility is contracting, which is going to lead me to the next point with technicals, which is the volume. So to put simply, I was saying, right, so the depth is contracting, which is basically the supply contracting, right? If something's whip-wash, you know, all up and down, up and down, up and down, it's supply that's driving it up and down, up and down. And, you know, an inconsistent demand. But if demand stays the exact same, so, you know, constructive price action, to put simply, if demand stays the same and supply is gone, it only takes a little bit of demand to push the price up like crazy. You know, it's a relative thing that determines price, supply versus demand, the ratio, right? So if you have, you know, if supply goes from 5 and demand is 5, and then supply goes to 1 and demand is, you know, still 5 and it goes to 10, boom, it's a huge multiplier on the advance of the stock. So down here, as I'm talking about price tightening, right, and the depth reducing, volatility decreasing, you can see it in the volume down here, the volume bars. You can see that, like in the part I was highlighting, right, this is the phase of volatility contracting, just in terms of the candlesticks. And then here, I'll draw the same line. This is the volume over that phase. Boom, plummets, which sets the stage for as soon as that volume starts picking up again, right? So over this time, it was so low, it picks up and it just lifts, right? With the volume lifts and the price in result lifts because of that relationship I was talking about, the supply and demand, right? There's super low supply and then boom, demand spikes, right? So in terms of technical price action, just to I'll do a quick summary. I'll make a separate video for fundamentals. This video went a little longer than I wanted to, but so to summarize, you absolutely need, if you're planning on buying a stock, for the stock to be trending up over the long term. And how do you determine if a stock is trending up? You could say lower highs, higher lows, etc. To put simply, the most foolproof method is the averages. If the 20-day average is up, the 50-day average, 150, 200, all heading up consistently for months at a time, that's an uptrend. Logically, that's about as precise as you could define an uptrend. So that's step one. You need that. You should never buy a stock that isn't in an uptrend. Then step two is you need to buy a pattern or a type of price action that allows for a strong move in your favor. So for this instance, you could have a very small stop loss and catch a strong move. That's what makes money. That's what makes you money in the stock market, is having high return relative to your risk. At least odds are. Most people make money that way. And then number three is the volume. You really want to see volume dry up. It's not a necessary like the moving averages, but it's an essential role in price movement, because price movement is entirely dependent on supply and demand, right? So if there's low supply, it makes everything much easier, much more explosive, etc., etc. But that's about all. As you can see here, this stock, I'll quickly show how much this stock moved. This stock moved 65% in 38 days, and then proceeded to make another base up here and has broken out today, which is pretty fun. So that's my technical overview. I'll make a part 2 to this how to select stocks video, and that will be going over fundamentals on FinViz. Thanks for watching. If you found value, subscribe and like.